Welcome to our special Count GPS webinar today. My name is Timothy Munro. I'm a Director and Founder of Count GPS. With us I have Susan Banks, who's one of the Senior Accountants at Specialised Business Solutions at our accounting firm, and also Harvey Penny, who's our Sales Manager at Count GPS. It's great to have so many along to our special webinar today, and what we're doing is we're going to focus exclusively on tax planning. We're going to look at, first of all, for a few minutes, the philosophy we have behind offering the tax planning service and why we do things in a certain way. Then we're going to run through, I'll go up to our presentation here we go. What we're going to do is after we have initial introduction, we're going to run a real live case study of myself doing a tax planning meeting with Susan Banks. So Susan's going to be the client, I'm going to run the meeting, and I'm going to race through it because I don't want to get bogged down in the chit-chat, but I just want to show you how we use the tools on Count GPS to deliver a fantastic and concise tax planning service. Afterwards, Harvey Penny is going to interview Susan Banks and ask her from an accountant's perspective why she does things in certain ways, tax planning, and I suppose some of the tips based on her how many years, 18 years experience at Specialised Business Solutions. Susan's the accountant's that's been here the longest apart from myself and my business partner. So she's got a fair bit of experience here, even though she's quite young. Okay, so first of all, what we want to do is just run through tax planning on Count GPS and some of the tools that we have available on the Count GPS website. So that's our Count GPS website here. And don't forget, come end of June, early July, we're going to have our brand new Count GPS platform, which we're very excited about. Everything you need for an accounting firm within the one browser. And we'll be sending out what we call our cloud plan process to help you to see how you can move your accounting firm gradually across into using all web-based apps. We're very excited about that. And we're very excited that we're definitely going to have web-based tax for 2012. Not this year, but for the following year. That's something we'll talk about as time goes on. Tax planning, we go up to procedures and then to client services, and we click on there. Okay, now under client services, under annual business services, we have our tax planning review. I'll wait for this to open up. Now, we're still using our 2010 tax planning module just for the point of this webinar today. However, we're halfway through upgrading everything with all the changes for 2011. In 2 weeks' time, we hope to have all the 2011 tax planning module and documents and everything up and running. Don't forget, we've already released our 2011 FBT module, so that's live, available for you to use right now. We've sent an email out about that, so you can start using that with your team. Okay, so tax planning, what we have, the important documents or the process that we have here is, number one, we need to inform of our clients about the need for a tax planning meeting. So we've got a letter there that we can send out, and we can cut and paste this and put it in an email. So we're moving at our accounting firm to as much electronic way of communicating with our clients as possible. So instead of using this letter, which I'll just open up here, we will email this out to all of our clients. All of our clients are on email now and prefer it to letters. So I think it's going to be a lot easier just cutting and pasting and sending this out. If you've got an Eclipse website, it's very easy to send this out to all of your clients, just cutting and pasting and putting together a tax planning email. So we need to put a due date, a time period for them to get the information back into us, and that's all we need to say. And what we found is a follow-up phone call after sending this out is the best way to get a client in to have a meeting. Now, why would a client come and have a tax planning meeting with you? We would normally charge a minimum of $500 to $750 for a basic tax planning meeting, and that takes into account, say an accountant on $250 to $300 an hour charge-out rate, takes into account 1 hour in preparation for the meeting, 1 hour to do the meeting, and maybe half an hour to finalise the report. That's the absolute minimum that you'd need. So even at a $250 charge-out rate, that's 2.5 hours. So that's easily, $500 to $750 worth of time that you need to bill out. So when we talk to our clients about this, we say, look, the cost for a tax plan meeting is going to be $750, and we're talking about not small individuals, but we're talking about people earning $100,000 a year plus, or people that are in business with a trust or a company. And for larger businesses, obviously tax planning is going to be a lot more expensive. The way we position it is, look, we're going to find for you at least 3 times what you're going to pay us in value for the tax planning meeting as tax deductions. And if you don't, the tax planning meeting's for free. And that's a pretty simple way to get them in. Now, we've never had to do a free tax planning meeting for a client because we've always found things that they can do to save them tax. And so just getting the client in front of you, following a proven procedure, is just so important, and not just from tax planning, but you'll find in that meeting the client will talk about all these other things that you'll be able to cross-sell and therefore get a larger client share of your services with your clients. So tax planning meeting is one of the 2 to 3 what we view as absolute key meetings throughout the year to have with your clients. Now, to make it easy for you, we put together a tax planning agenda. Let's open this up. And we print this out, and put your own logo on there, change it to your own colours. We print this out and give it to them beforehand and have it on the table when they come in. And lists out, first of all, we'll go through the financial statements and talk about any other income for family members, any gains or losses of investments, and we'll do an initial first cut tax estimate before we actually start talking about strategies. Then we can start looking at strategies, and obviously looking at last year's and this year's, we're going to have some different things, really looking at the contribution limits and making certain for super that we don't exceed those. We've got the tax planning checklist, which I'll run through in a minute, but the key things are, for a lot of clients, super, make certain the contribution limits aren't exceeded and that we put maximum amounts in. Have we got cash available for that? Can you prepay interest on investment borrowings? It's all pretty boring, tax planning these days, because there's nothing really, really funky that we can do like in the old years. So I think part of the tax planning meeting is helping clients to understand that whatever political persuasion you might have, we all know the government's running out of money in a big way because of all the handouts that they've given, and so therefore they're trying to clamp down across the board on any opportunities to claim tax deductions and things like that. So it's really, especially with all the recent changes to trust laws and distributions from trusts, what we're trying to do is help our clients to see that there isn't a magic wand you can wave to get out of paying tax. There's a few smaller strategies that you can use, super contributions, and some of these things here like prepaying income protection insurance and a few other things like that. And a lot of the tax plannings actually make sure that you don't have any Division 7A loan problems or got any overall structural problems with the way that you're running things. It's as well helping your clients to understand that while we might have given them 80 grand a year each in the past and then distributed surplus funds to a company to cap your tax at 30%, the fact that you can't do it anymore means that we'll probably allocate 180 grand of income to mum and dad, say if they're earning 300,000 or 400,000 in a trust, because an individual, the tax they'll pay on 180 is basically the same, or it's not as bad as actually allocating 180 to a company, because the individual's got the slow work up to the top marginal tax rate, where a company is paying 30% on the first dollar. So when you work it out, like roughly if you pay an individual 180, it's the same as paying 180 to a company. But the advantage is the individual has got the money in their own hands and can use it. It's not caught in a company and needs to be loaned out. So a few little things like that. If a trust earns $400,000, you can give 180 each to mum and dad, put some super contributions in, flick a bit out to the kids, and you've almost got $400,000 out of the trust. And the average tax rate you're paying is 30 cents in the dollar. Now that's a pretty good outcome, considering they've got access to those funds, they can pay off loans, non-deductible debt, or whatever they might want to do with it. So the big part of tax planning is explaining these things to the clients and helping them to understand that they need to focus not on paying zero tax, but having a good business, having a good business model, getting some good income in, and then we'll do our best to fine-tune things and making certain that you're focusing on your wealth creation, on where are you putting the money that you're earning and going from there. So that's the agenda that we've used, and don't forget we'll be updating this for 2011. So you print this out, give them a copy beforehand, and have a copy of that on the table. Now, when we go through the meeting, we'll have open and printed out on the table our tax planning checklist. And as we've said many times in the past, the advantage of the CountGPS documents is they're short and concise and cover virtually everything that you need using the 80-20 rule. without getting bogged down in 10 or 15 pages with a checklist of things. So here's the 2010 tax planning checklist, and you can see here, before the client meeting, the things that we need to do. Review the prior year tax returns, review carried forward losses, look at where the cash has gone, and see if there's any urgent issues like Div 7A or trust deed updating. Then when we meet with the client, what I'd normally do is that I'd run through this checklist beforehand, and you'd know which of these items really applies to your clients. So I would highlight which one of these, because you wouldn't go through all 22 unless they all 22 did apply, but you'd probably find 5 or 6 or 7 of these apply. So you'd highlight them. And when you come to meeting with the client, you can just go straight to the things that you want to talk about. So on the left, we've got the general strategies, and that's talking about deferring income, incurring expenses before 30th of June. Are they going to do their stock take on time? Can we write off bad debts? Make certain the employer's super is paid in cash so it clears the account before 30th of June so we can get the tax deduction. Whole lots of other little things like that which are really procedural. Then on the right-hand side, we've got what we call our specific tax strategies. And these might be strategies to fix a Division 7A loan account problem. It'll be to maximise what we put in super, to prepay margin loan interest. Can we pay life insurance via super? Can we prepay income protection insurance? We might have FBT exempt items that you can package into a salary package, like a notebook computer or an iPad or anything else like that. Depending on the award they're on, can you pay them tax-free overtime meal allowance? If they're doing travelling, do they need a travel logbook? These are the things that we need to consider as specific tax strategies, so they're on the right-hand side. After we do those, we would then in the meeting just review asset protection strategies. We've had 2 clients, 2 females recently die, one of cancer and one just very suddenly last week. And it was very, very sad because they were friends of our firm as well as clients. And fortunately, you know, for each of them we had high levels of life insurance, so very fortunately the family's going to have something to help them out. Won't cover for the person that's no longer there, but at least the money from the insurance will help them. One thing we learned from the first case, though, was that the lady that died, she was the one that had all the documents and did all the paperwork, and she knew where their wills were and everything like that. So when it came to looking for the will, no one has an idea where it is. Now, we checked with our clients, have you got wills? And they said, yeah. But she's the only one that knows where the will was, and now she's dead. And the husband's frantically trying to find it, and he can't find it. So we have to go to court and get a grant of probate so he can administer the estate. So the lesson we've learned from that is, if a client says they've got a will, always ask for a copy of it and keep a copy on your files. Because 9 times out of 10, if they say they've got a will, it was done 15 years ago, and it's so out of date, it's crazy. So that's an opportunity to cross-sell. But secondly, it makes certain that you're in a position to help your clients straight away if anything bad happens. So we always ask to get a copy of their will, and we're actually putting this into the new questionnaire. Make certain you've got a copy on the file. Look at those asset protection strategies as well, converting gifts to loans and trusts and secured debt arrangements. That will be the subject of another webinar that we'll do shortly about asset protection strategies, some key things to do. Then after the meeting, we need to prepare the tax planning report, prepare the invoice, and ring the client to discuss the report. So that checklist is an important one to have printed off on the table in front of you and highlight the things that you need to talk to your clients about.